find a mentor as soon as you can. I mean, no matter what your industry is, I'd find somebody that's a sage that you can go and take coffee to and say, hello, I'm trying to accomplish this in my life.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Todd Mendenhall here on the show. Todd, welcome.
Thank you. Appreciate you having me.
I'm glad you're here. Say for the audience to say, who are you, where are you from, what do you do?
Yeah, I grew up on the south side of Des Moines here, and I've been here my whole life. It's been I love Iowa, I love Des Moines. It's been I've traveled 90 countries, and I'd love to come home to Des Moines. Des Moines is a fabulous town. Love it.
What do you do?
Well, I'm an entrepreneur. I've got, over the years, I've owned maybe 15 or so entrepreneur companies, bought and sold. I still have some operating companies where I'm involved in day to day. But I've been an entrepreneur my entire life.
Where did that start?
Yeah, that's a very good question. My sister was cleaning homes, and I was going to school at Drake, and we had several customers of hers ask if we would do commercial cleaning, and my sister wasn't obliged to do that. And so I received $10,000 1990 from an investor. And that's how I started my first operating business when I was a junior at Drake. So I've never have worked anybody from that point on.
From 1990. That one's still in existence.
Yeah, I still have that one today, 35 years this year.
Yeah.
Yeah. So I still have that one.
Incredible. Tell me a little about that. Then I want to venture off to some of the other ones that has grown substantially over the years.
Yeah, it really has. And it's kind of ebbed and flowed. And you get into much like real estate, it has like segments. You think it's all one, but it's really really distinct in, like retail, which we would call retail, which house cleaning. And but there's really distinct. And so I've kind of morphed over the years what we're doing and what we represent and what we do. And either I wouldn't find it competitive or for whatever reason got out of that piece of it. But so we're doing a lot of this reiteration, I'll call it, after 35 years, is a lot of data center work. It's been really good for the Des Moines market, for us in particular, and for us on a national level. We've really followed them and really built some strong relationships with them.
I would imagine once you can unlock, once you have a client, they know, like, trust you, then it's a function of, cool, where else? Yeah, great. You're doing great now. Where else can you do this for?
Right. And of course, those bigger companies, they don't like one-offs. They like, if you're going to do Tulsa, then we want you to do the balance of it. It's a little harder in practice. They like that, but it's harder on the operating side to figure out how we're going to go to these middle market towns like Des Moines and get 40 or 50 people to go to work. And we don't know anybody. It's a challenge, but it's been good to us. They've been really good to us. We've been good to them. And it's really a market segment that we've kind of focused on the last, I'd say 10 years or so. It's been really good to us.
Give me an idea. All right. So you went to Drake, you graduated Drake, or maybe don't graduate. You're in the cleaning business, right?
Yeah.
And talk me through those first handful of years.
Yeah, I really struggled my first. I was a South Side kid. I really we weren't taught that you could own your own business. I wouldn't say that was really at that level. But at my age was, you were going to work for 3 or 4 companies, or maybe the city of Des Moines or Polk County, or it was pretty structured, and all my family was working for the city of Des Moines or one of those entities. It wasn't. And I just had this happenstance occurrence, and it was just an inflection point by chance that my sister got involved, and then I found a partner that would happen to give me $10,000 when I was very young and probably didn't deserve it. And at that point, I thought that was all the money in the world, and started off and really had a really kind of a rough, I'd say, my first 10 years working all day and then making bookkeeping errors and taxes. Really struggled. My first real break is when I was referred over to SCORE, which is like a senior retired executive program through the Small Business Administration. I'm not sure I think it's still functioning. And I went over there and he gave me like 15 things. And I had suffered so much. Like I would work all day and then I'd go to the post office and bind a bunch of bad news from whatever entity. And then I'd be like, oh, and it was just like a complete cycle of trying to get my head above water. And finally, this score gave me like 10 things, and I was so tired and so distraught. I just sucked them all in like a sponge, and I immediately went like, "Why aren't you doing this?" I'm like, I don't know why I'm not. I should be doing that, and I just was a sponge, and everything that he gave me, I just took it immediately. Like literally, I'd leave there. I remember going back on like, well, I'm doing that tomorrow. And I put in, and man, it changed me almost overnight. It took me 10 years or maybe more to get to 50 people. I mean, after that, I mean, it was just, it kind of exploded. It really was like a, and then I got some, I guess if I'm going to answer definitively is finding a mentor, finding somebody that been through it that can say, do these things. And I had so many pain points that he could say, and I would do it. I mean, I had been through so much turbulence that had such a strong thirst for learning. I was ready to, I was ready. I was more than willing to learn from a sage. And man, it changed the whole direction very quickly. So
That's incredible.
so
Well, the information's great, but it takes an operator to go out and put these things in practice.
you still have to work hard.
Yeah.
You still, yeah, I will tell you that I was always, and I have always been, my dad and mother, we always had a strong kid. And so and I'm still not, I'm 57 this year. I'm not afraid of work ethic. Even I would say my old adage to a lot of my operating people is that a strong work ethic and some common sense will get you right around 90, it'll get you a long, long ways. Now the other 10% you need to work on, but if you're working hard and what is the common sense thing to hear? Especially I have blue collar industries, right? And most of them are what would prevails with common sense. It's not AI based. And so the blue collar world that I live in is much more like, okay, what's the most practical and common sense thing? And it's going to get you a long ways. But it got more sophisticated, and I didn't have the ability at that time to get me through those like AR and billing and strategy. And I've never heard, they didn't teach us very well on looking forward for 10 years as a vision statement, when we were kids. So that stuff I really struggled with. So I just treaded water for a long time. So
what was the next business you found yourself in?
Yeah. So then I started making some money, and then I thought, well, this is great because I started and so you would call me hey, I have this. Sure. And I got to where I was at a wide range of not in my lane, and I had some failures, had some winners, had some immense failures. And I kind of, and some of those were a little painful. I'm like, well, wait a minute, and that's where I learned that term that you heard, I have to stay in my lane and stay in like or similars. I had a Nextel dealership. We were the largest Nextel dealership in Iowa, printing business. And some of those got so far out of our lanes that we weren't well in those lanes. And so, but then I said, okay, who similar contact, like if you're industrial business, what else does that industrial person use? So I got into the trash recycling business, and that's been a real, and I'm still in that business. So that's been a really good lane for me. It's the same contact, it's the same people, same mentality, and so I had gotten rid of all those peripheral ones. And like, we're not going to go down those paths again, and so that's how okay, similar lane, similar contact, similar strategy around them. And that's where I've been really successful over the years. But I did have I don't know, 7 or 8 there that I will call really not in alignment with what I would call legacy business, So
those are the ones you take the learnings away from and apply to the next one.
Right. You're like,
Right,
And it's one of those things I realize is that you think but then you start getting in them and doing the puzzle on it, and you're like, well, I don't know anything about this business and how it functions and how I get paid and the inner workings. And I would say that cell phone business was really one that was really challenging for us. We were so far away from it in terms of how we operated our legacy blue collar. To go to that business was just too much of a jump. We weren't successful at it. So
you mentioned, when you're getting into something, a new business, a new venture, it's imperative to be able to understand it at a deep level. Having an operating company, sooner or later, real estate is a component of this. You're gonna lease it, you're gonna buy it, you're gonna control it somehow. Talk to me about real estate early on, and then we'll move it forward.
Yeah, I just felt like I took a couple. We, I think early on in my business, it was a blessing that we did lease, and I guess because I have friends. I mean, I always been taught, or I wasn't always. I learned that the operating company has to be a separate. You have to treat them separately, and many small business owners treat them as one. And what I mean when I say that is that the operating or the real estate company isn't necessarily in sync with the operating company's needs, meaning it's outgrows it. And the owner probably doesn't want to leave his own building, his or her own building to do so. And so I see that a lot where they have an asset that they're trying to link themselves to, and it really doesn't fit where they're operating because they've grown or shrank, and it becomes a challenge for that operating company to be in that owner's space.
Right.
And so I think early on it was good for us because we're growing so fast, and then you're like, okay, we're a lease for a couple of years, thank God, because we're outgrown and we need to go to something else. And I think that's good early on, but after we got to a size that we kind of stabilized, I'm like, well, why I need to make better decisions here. We'd gotten into some leases that were less than ideal, and I feel like what I'm not getting after the end. As you know, there's no asset at the end of some of those. And I thought, and then we were starting to do some, and I think this is kind of pivotal. We were starting to do some modifications to them that were large TIs, and then you're like, okay, I'm just baking these and then I'm leaving them on the street every 3 or 4 years, which made no sense. And so that was my first. I have to, again, going back to how I started, none of that was easy. I think unfortunately, I just went through had some pretty hard bumps there for a minute. I'm like, well, wait, take a seat back and have an assessment, if you will, like, well, I'm not going to do that again. Sure. And so that's really, I would like to say that I thought it was a good avenue for investment, but really it was out of need for our operating companies. And had gotten into some really bad leases that really was detrimental to the operating companies. So that's how I kind of waded in the beginning. And really at that first couple, I mean, I had a good thirst for learning. I always has. So then I start, okay, I'll crack the books and, I'm going to get myself educated so I don't enter myself into something derogatory like I did previously. And so that I really got myself. And so then I kind of went from there. But the beginning we were just trying to manage a home for these operating companies.
Right.
And that's how
Entry point.
that was the entry point. My dad, I know nobody had owned real estate. I never had any interest in it, but and then it kind of just grew from there, and it kept growing, and it's been really good for me. I mean, I've had,
because you've taken it outside the operating companies as an investment.
Right. And so then I'm like, well, and so I start, after we were successful in buying stuff for our operating, I'm like, well, I'm going to do this third party. And maybe I think you and I had talked about it. What I really like for me is that the ability to look at a deal independently. And if it doesn't seem right, either via cap rate or via the parameters on what I would call risk reward, then I don't have to do it. And I think I see that as an enormous luxury. You can go up and down in cycles or what's out in the market, but my ability to look at a deal and say, this is the right time for me and the right risk reward, then I can invest. And so so I've taken that out, and over the years I've accumulated a pretty good sized portfolio. Although I have as I've aged, I've kind of aged out of some of those rental homes.
We chatted about that the other day, the house side of a portfolio versus the commercial side. Yours has always largely been on the commercial side, but you still have exposure to the house side.
Yeah, I had some houses, and it's just I don't know. It's just a different, much like what I was talking about. It's real estate, and you think, well, but it's really a whole different, it's a whole different market and a whole different way of acting and carrying yourself. And as I've aged, and I thought, I don't want to be maybe in that space anymore. That doesn't probably fit me. So I have a couple left, but it's not something that I'm going after on a day-to-day basis. That's for sure. All of mine is commercial. So,
you mind sharing the story with everybody about the the business in the front yard. I won't give up the ending to these.
Yeah.
I just think we were swapping stories the other day about, man, kind of the commercial side which is great. It's kind of boring. Meaning it lacks excitement relative to the tenant drama and whatever's going on. So we're swapping stories about kind of colorful and funny stories.
I had a story. I had a tenant here in Des Moines, and they'd called, and I had a full-time, I still do have a full-time property manager, and he called and said a police department was on site, and that's never a good, and long story short, he had told a relative, this is in a front yard in a suburbia. This is not like it's in a urban space. I want to be clear. This is a suburban space, and he had told a relative of his that he could put a taco truck or some type of food truck in the front yard of my rental home. And we went over, and the neighbor had complained because the line to go to the food truck and they would sit on the curb and sit on the steps and sit on his patio to eat their lunch that they got at the food truck. That I said, so then that will and we had some pain points. I had some derogatory turns, and I'm like, it's probably. So literally that day, I said that was kind of my final inflection point. The taco that broke the camel's back was, I would have to agree with you. That was kind of the.
Thank you for indulging me. Once more.
Hey, Iowa investors. This is Ava Baukamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
On the commercial side, you've done a multitude of things, including ground-up construction. Talk to me about that process, the thinking behind, the development piece of that versus buying something existing, and then maybe give me a little more color as it relates to cycles with the market environment one happens to be in or one happened to be in.
Yeah, and ours are kind of specialized. I was in some recycling business, so the content for those is pretty unique. So it's not like you can go a warehouse to a warehouse. Meaning, in my mind, 20-foot clear span. We got some dock doors, and they're chucked out. These are it's a little more specialized. So you have to kind of be wary of that. But if it's just warehouse space, and in my mind, in this particular market we're in now, if you can buy, it's hard to come out of the ground. And these are my opinions, right? Yeah. At this point now, it's hard to come out of the ground with construction costs and interest rate and the scarcity that's been going on in terms of supplies. It's hard to come out of the ground, in my estimate right now, and come up with a competitive rate that you could lease it for and be in a cap rate that is comfortable for me to say the deal would be okay. Yeah. It's hard to find that in this particular market. And just know that I'm based around, I'm in Iowa only, so I'm speaking for Iowa from an Iowa lens now. So for me, it'd be ideal that I would find something we could modify it slightly and fit one of the operating companies in it. That would be, in my mind, ideal. Construction just it's a permitting, and the water retention rules I've developed one on the east side of Des Moines, and the water retention has gotten to be, and I know it's in the legislature now. It's just gotten very difficult to develop from ground up. There's just a lot of rules and regulation. Not that it's can't be done, but it's just more work, and not that it can't be done. So we've kind of cycled. I did all of it, but my ideal, because then I also like the timing. It's much more, instead of a 2-year runway, we're talking about, maybe a 6-month runway. So it's a much more, it's a much much quicker runway to buy something like along those lines. We're permitted, we're zoned, we're ready to activate. So, and then if it's not me, I'm doing it for third party. I can and that means I can turn it around and rent it. I don't have the carrying cost and that stuff. So, I mean, for me, but I think it's cycles too, like we have some retail centers, some strip centers, and I just don't, I don't know. I think you got to be very, very smart on location. I still think you can be successful. I think 10 years ago I think you could put about one anywhere and be successful. And I think now you got to be smart about it,
Yeah. A decade ago, there's a lot of things going in the right direction.
Right.
A lot of tailwinds a decade ago between construction costs, interest rates, sheer demand.
Right. You could just put something. Yeah. These people were building retail centers with nobody and they're filled up before they could get the top on them. Right. I think that for my estimate that kind of unless again, I think there are some retail locations in specific parts of town you can still do that, but I think just putting them up blindly and hoping people will come in that type of setting is gone. But again, I feel like that when you're doing that and then you cycle, I think so. I'm old enough now to see a couple of them. I think we're 2 or 3 years ago, like right before the pandemic. I think we were and so I got out of some stuff. Yeah. I think we were in my mind, again, as more of not as a day-to-day real estate developer, it was time, I was getting papers from brokers at 4.5 cap. And I just, unless you have a tax consequence that allows you a tax benefit, I don't have the ability to be able to do the math appropriately to come out with a 4.5 cap to be successful. So in my mind, if that's what I'm getting, it's time to, if I have stuff on the block, it's time to sell. Right. It's time to go. So I think we'll see this cycle. I'm seeing goods coming down. I'm not sure I don't think we're at the bottom. And so again, in my mind, and the luxury of time that we had talked about, then I'll be like, well, I think there's some opportunity. There's some buying opportunity. And then, the cycle will start again. For me, myself, I don't think it's a good time. And I don't think it has been for a couple of years. I went to a symposium the other day down at Principal, and they had a panel. And it's not been the best. Been a tough couple of years here for a lot of people in that commercial space. And again, like in Des Moines, the warehouse is cycling. A lot of people went in, and now I think we ran that cycle, and that absorption rate is still not done, and there's a lot of that inventory still out. So I do think you got to pay attention to the cycles. Again, I want to make sure that that for me, the luxury is not having to participate every day. And I think that's something I think that when you have to do a deal, regardless, it's you have the potential to, when you have to do it, it makes it much more difficult.
Yeah. When the money's got to go, you're right. I've seen people, particularly 1031s come to mind.
Yeah.
When guys exchange out of a 1031 and they got 1031 money, and it feels like you often hear that they got to buy something. Well, you don't have to. You can pay the tax consequences, but I do understand. Some of those guys have picked up some stuff that you're just like, I can't justify.
I hear that a lot. I have a client out of 720, or 721, 1031. We got it. And to me, I get it. I think, but remember, you're on the 1031, you're just deferring.
That's right.
And so at some point, you're paying the tax. And so if you can do it and have a deal and defer it, I think it's wonderful. If you're doing it primarily to defer it, for me personally, that wouldn't be so I've sold some industrial, some fairly substantial industrial, and I'm not seeing that I can turn this inappropriate. Why take the risk of buying something? Because in my mind, okay, if you have to buy something, and believe they introduce themselves. I've got a 10. That's how a broker introduces the deal. I have a 1031. Meaning I have somebody that has to buy.
That's right.
And I think that you're potentially overpaying, and so you're advantageous of getting the 1031 may be negated by the deal that you put yourself in.
Isn't that music to a seller's ears?
Yeah, to me, if I were a seller at 1031, you're like, okay, we've, right. I just stepped up to the plate and hit a home run here. You might as well just say that to me if you introduce it to that, because the time is good, and they probably have the finances. They're probably coming out of a deal that they got the money, and
they're on a timing,
and they need to have it done. You're like,
got to have it done, and if you can't get to the finish line, it's likely too late for them to pivot.
Right. Let's go. so, but I don't know. I guess you're just delaying that ability to pay those taxes anyway. So if the deal's not right, I wouldn't, but I hear a lot of investors say that's, number one reason I don't want to pay those taxes, at least today, so I don't know. And I'm not saying I don't want to get off. Maybe that's good for some people. I don't, whatever tax circumstances they're in or wherever they're at income wise, but for me, I might as well, if the deal's not right, that's not going to be my number one for making me do the deal, so, but I think that cycle is an important, and it comes back up to me. It's like the stock market, you have to, because the time to buy is when people are selling, right? And you have to have watched it and know it and like, okay, when people are, that's the time to buy. So I think you have to be a fairly,
and have the guts to
and have,
trigger.
and that's it. And to me, that's the, like when I listen to Bloomberg on the way out here, and like, well, ADP numbers are down and all, and we're selling. I'm like, well, you got to be able to filter that through a system that you've set up that you have trust enough to put your money down on substantial investments when others are selling it, because that's what a building is. It's just like a stock. If somebody's selling it for a number and you think you can get in, that's what you're doing, so I think you have to be, but it takes it's hard to buy on the downswing,
Correct. Yeah. When the days are darkest, that ain't easy.
Right. Let's buy the building when it's, when we don't have tenants and we don't have a pro forma maybe, and our cycle's not been good for a couple of years, and you're going to buy a building. It's tough. It is tough on the bank. The whole ecosystem is just a lot rougher.
How do you condition yourself mentally to be able to have that intestinal fortitude when times are tough, to actually go down and go, yep, today's the day?
Yeah, I guess I heard the other day, I think that it's important that we always think in these cycles that this is the worst we've ever had. And so we were only 250 years old, and we've had, in that short time, we've landed on the moon. There's changes all the time, and every generation, every year thinks this is the worst ever, and it's not. And I guess I wish I had a magic wand. I just think that, and maybe I'm too optimistic, but I think it all runs in cycles, right? I do think I think the doom and gloom is always overrated. And I think if you can read into that and understand that, you can do a lot of good, either in an equity market or in a real estate portfolio. But you have to have some fortitude. And most importantly, what I see is you have to have some dry powder, right? You have to be able to act on it when it's time to act. You have to have the bank, you have to have everybody in alignment for you to act when the others are not. And I think that's a difficult space as well. You got to be able to so the fortitude, I don't know if I have a system or more of like, okay, I think that this is, I've seen the cycle. We're starting to see, maybe you start to see a few signs of that, maybe in construction spending's up, or, and it just that early sign, because I think if you can play that right, you can
play the wave because of the momentum and when it moves, because that tide turns.
Yeah, the tide turns because there's a building for sale during those downtimes, much like we've been there. There's a lot on the market, there's a lot out there right now, so I think you have to have the fortitude and know that it's going to come back, but it's risky. I mean, it's risky.
Not for the faint of heart.
No, I wouldn't say that. But again, to me, it's more like, let me look at, I guess I like compartmentalize it too and try and not listen to all the noise. Okay. What exactly do I have here? What asset do I have? What tenant do I have for it? What does it look like? What is the cap rate? What is my CapEx expense going into it, or what does that look like? And then take them on a more individual basis. I don't know. I've had some wins, but I think it's still, like you said, to write some checks during those times it can be difficult.
That's well stated. Analyze it and look at it as an asset by asset case. The office comes to mind today. You read the headlines: office terrible, things are bad. There's plenty of offices that are trading because they're underlying with really strong tenants with really good leases, and they're not going anywhere. There's a number of them. I'm not saying there isn't. The sector has its challenges, but that doesn't mean all.
Right. I was just with a developer yesterday, and we talked about that location. He talked about locations. I mean, if you're in the right location, he had an aged office building, and it was size significant, 300,000, and he's got it completely. And so you have to know what's working and what's not, even within the sectors like office. But, like the financial set, some of those, going to apartments or there's always and so if you have an asset, that's legacy asset, in my mind, you got to be, okay, I have this asset, meaning you're not doing the due diligence, the tenants moved out, or, okay, okay, I need some creativity here. The old, do what I've always did is not happening. What could I add amenities? He had added some amenities that are called for. He had added a fitness center and some other, and that made it more marketable. Just leaving it and having it be maybe that's not the choice, even if you're having the right location. Right. So being creative with the asset, thinking something out of the box. Okay, I'm going to take this old office and I'm going to make it multi-story housing now, or I'm going to build in the amenities or enlarge it or do something that isn't offered in town or isn't is being sought out. There's just not a lot of it. So I think even with existing, you can still come up with some ideas to be creative to get it to where you need it to be, so.
All right. So I'm going to go, speaking about being creative in the 90 countries.
Yeah.
Talk to me about some of the things you've taken away from all your experiences that have just changed you and shaped you as a person.
Well, I think travel is the world's best because it makes you tolerant of, you look less at people's origin or color or their religion, and just people are the same around the world. They have different ways of going about it and different customs, but people are generally the same around the world. They speak a different language and they have some nuances, but they're pretty much the same. So I think that travel teaches you some tolerance for, I may not agree with you, but I respect you and want to listen to your side. And I think we're losing that in this world. It seems like there's a lot of party, a lot of division, and it's getting worse and it's not getting any better. And I think that travel allows you to maybe have a higher tolerance for, you may not look and see what I see, but I still like you and respect you, and we'll go down the road together, although we have differences of opinions. I think that's the best piece of all. So, and if I got to tell anything from 90 countries, that's what it would be. Is like you just have to. Most people are good at heart. There's always some bad actors. There's bad actors everywhere, but I think for the most part, if you get past, if they have a difference of you and you respect them, you're like, well, I don't agree with you, but we're still going to go down the road together. I think that's the best relationship you could ever have.
If you had to live outside this country, where would you live and why? If you had to live in any other country except the greatest one, where would you live and why?
Well, that's a very difficult question. That's a difficult question. The Far East has the world's best service, Japan, Vietnam, and the most beautiful beaches and the best service. The services like Japan is nothing like what we've seen. You remember they're homogeneous, right? So there's no, you will never hear a horn in Tokyo ever, right? Because they all remember they live as we're one, right? So it's what's good for all of us, not where we're taught is what's good for me, no matter what damage I create for others. They're created where what's good for all. So they're very polite, very service oriented. So if you want beaches, but it's a long ways from Central Iowa, but it's spectacular. Vietnam, Phuket, Thailand, the resort towns in Thailand are beautiful. To live, I'm not sure if I can articulate that in one statement. I'm not sure where I would live if I would probably live I'd probably live in Italy or southern Spain or, somewhere. It's hard. It's very hard. Like if you want history, I would go here. If you want to go on beaches, you know what I mean? It's very hard. Like Dubai, some of those that, he thinks he's going to run out of oil. So he's created this pseudo atmosphere. You want to talk about real estate. He's going to run out. So he wants to create like a resort. Like I would label Dubai as Middle East Las Vegas, right? They have huge resorts now, 7-star hotels, and just unbelievable facilities. Just, you want to talk about creativity. I'm gonna build an island in the shape of all the continents out in the ocean, and I'm gonna sell it. I mean, who would dream that up, that it's even a viable thing? But now there's the Palm, and there's the World. They've been a little unsuccessful, but it's they got the world's largest hotel, the only 7-star hotel. The Burj Khalifa is the largest. It's these buildings are just. They're incredible. They're incredible. It's just incredible. I think you I think that travel is I think the travel for like somebody, a child or somebody, to show them the world is just, I think it's a wonderful lens for them to understand and just to people better and understand themselves better, So I think that's a wonderful thing, but I'm not sure if I've answered that correctly for you, but I love travel. It's a big part of my days. I love it.
Yeah.
Been in a lot of countries. So
no, that's fantastic.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
What do you look through the balance of this year, 2025? What are you most excited about?
Yeah, I'm excited now that I have what I worked so hard for. Is I have the ability to work on what I want to, which is in my mind is a huge luxury. I no longer have to get up and work on things I don't have to or don't bring me joy or are not in my core competency, which is what I did the majority of my working life. I just had to do because I didn't have any choice to do it. So for me personally, I can work on projects and with people and experiences that I want to, and I think a better way to say is that my companies are working for me instead of me working for my companies. That's what I will tell you. But for the majority of my adult life, I worked for my companies. And so that works. When I go to work tomorrow, that's what really, because I enjoy it. When you go and have some passion, if you don't have passion or purpose, it's really tough to get up in the morning. So I work on things that bring me joy, and so I'll continue to work. I give back a lot. I go do a lot of speeches to young entrepreneurs, high school and college age. I go to Drake. I spent a long time on the global board of the Entrepreneurs Organization, trying to potentially teach those kids. For me, when I was my age, and I know that it's changed because you can major in entrepreneurship at the University of Iowa now. John Papajohn had created these beautiful centers. But when I was a kid, you weren't even allowed that you could even think like that. And not that every kid will latch onto that, but at least so I've kind of spent my days exposed to it. Not everybody will take it, but at least it'll be another piece of the pie that they're exposed to, and maybe they'll do it and maybe they won't. So I like that piece of it a lot, where I put people, and then I remember back to my days giving people some simple tools and resources. What you and I take for granted that when you go to, especially college age or high school age kids, and you give them it's like they just light up. They just, you take it for granted, and you give them a few tools or a few possibilities, like saying it could be, hey, you could do this. Or like, well, I didn't know I could do that. I didn't even know that was a possibility. Will you teach me this? Will you help me with it? So I spend a lot of my days doing that type of stuff. Now for my real estate, I have gotten out some cycles. I'm still pretty heavily involved. I still have some heavy industrial stuff, but I still like to look at some deals and put some deals together. And I still like it. I do. It still brings me joy. I like to put the deals together. I feel like I have a good network. I have a good list of people that surround me in that, and I can put them together efficiently.
Is part of the joy the fact that it is mentally stimulating?
I think so. Yeah, I think it gets me like, you got to solve a puzzle, and they all have their unique, they all have their uniqueness, and you all have to like, how am I going to do this? And like, oh, don't worry about that factor. We need to be worried over here, and don't worry about over, And so, but I also, and people are seeking me out now. I've got this, and I want, I need to do this. Can you help? And those are fun. Those are fun deals. And only owner occupied stuff, they know what they want, but they don't quite have the expertise or don't want to do it on their own, And so that's, they're pretty straightforward. There's some trust factor built in already. And I like those. I'm helping them. They're helping me, and it seems to be so that brings me a lot of fulfillment. So I'm content. I'm doing a couple now. I usually have, a couple going on at any given time, almost all commercial. I'm not all that want to be. I'm no longer in the residential business at almost in any regards, but I like that. It really brings me purpose. I like to do it. I know everybody. It's like calling, I call the attorney. Hey, they all, everybody knows everybody, and we know, so that makes it easier. They all have a standard of, they know what I stand for. I know what they stand for, and it makes the deals go, pretty. The banker, everybody knows, they know the deals. I mean, there's no.
Yeah, we didn't create that ecosystem. It does smooth things out.
Yeah, they know it, and I like that. It's not like you're calling the first time, and right. They, like you said, the ecosystem, and you continue to use them. You find some trustworthy, and I think that's important for me. It's like you're not what I call reinventing yourself on every deal. You're like, here's who I use for this, right. And it's not that I wouldn't vary. It's just they know, and it just takes all that down, all that communication and all that, and it just shortens it up a lot. Yeah. You don't have all that. Who are you? What are you stand for? It just brings it together much more quickly. So,
you ready for the final 3 questions?
Sure.
If you had one piece of advice for your 20-year-old self, what would it be?
Find a mentor as soon as you can. I mean, no matter what your industry is, I'd find somebody that's a sage that you can go and take coffee to and say, "Hello, I'm trying to accomplish this in my life. Can you please help me?" I think a lot of times when we're a kid, we're like, well, I know everything, or I don't want it. And I would find a sage and a mentor. It just was and it's still, I still have one. I still go visit him and take him for coffee.
It's an amazing, I don't know if you can, this relates to you, but the older I get, the more I realize how much I actually don't know.
Oh, it becomes, in my mind, you know everything when you're like a teenager, 20s and 30s. And then as you get older, I feel like I have no idea. I mean, like this AI stuff, I think it's transformational.
Yes.
I don't even, I know how to,
yeah.
So I'm 100% with you. I think I know less as I get older, people, and these, I call them like compartmentalized. They're in these spaces, then you get behind, you look behind, you're like, oh, you think, and you get into it and you're like,
right.
Well, I don't even, I need
scratch the surface. That's it.
I don't even, So I think I would find a mentor or find somebody that's did it and that can give me, and it just smooths it. I mean, it's just, we're not, we're pretty, I don't know why you wouldn't have those bumps in the road smoothed out for you and make the same mistakes that people before you did. Not to say you can't learn from mistakes. I'm not trying to say that, but I mean, if you could avoid it, why wouldn't you? So I'll never forget those first few years. I remember every day I'd go to the post office. I mean, about every day. And they're like, well, you didn't do this federal government or some governing organization or something. You didn't do these 10 things correctly. I'm trying to fix it. I'm trying to work all day and work all night. And boy, I would really find somebody that would be able to give me some resources or just give me some direction, I'm going to a deal. Hey, my first one, I had a fractional CFO. My God, I mean, I had like at the end of the month, I'd have like a profit and loss. Like, you mean like at the end of the month, I'll know what I made? Yeah, that was completely, just transformational stuff, So that would be mentorship for sure. Finding a mentor.
2 books that changed your life.
Oh boy, I like The Gap and the Gain. I feel like that Gap and Gain book allows you to, I have had a hard time finding purpose sometimes and what's the reason for being and my why. And I like that. I like Gap and the Gain book, which is kind of like, I think the summary is that I want to be happy. I don't want to compare myself to Neil. I want to compare myself to myself and what makes me happy. And I think when I was young that I thought that if I made money, it would make me happy. And then I made some money and I wasn't any happier. So I was really struggled with that. And I think that book kind of relates to that, how that looks.
Dan Sullivan wrote the book, right? He talks about you can only measure success by looking backward. Otherwise, a lot of us as entrepreneurs, we're just go.
Right.
And, the horizon never ends.
Right. What's your pot of gold? Because I thought I was raised maybe middle class or lower middle class. It was just purposeful. I had to keep the lights on. But then one day came and I could keep the lights on. I'm like, well, now what? Now what? Now what am I going to do? And how do I do that? And what does it look like? And why do I get up out of bed? So that one's been a good book for me. I'm still not I wouldn't say I'm completely healed, like in terms of like what my purpose is, but it's gotten a lot better. So, because when you don't have that, I think it can be a struggle for a lot of people. My other book, boy, I'm a pretty good reader. Don't always think what you believe. Don't always believe what you think. And I think our mind, you think it and you almost get to yourself. I don't know, like sometimes I have a sore throat and I just think the worst.
Sure.
And I overthink, you let your mind overthink something that potentially is probably, if you take common sense and you that's probably not the case. And so I think that's a good book that's kind of helped me, like, don't overthink it too much, going back to that common sense we talked about earlier. So, but for books, I like to read about people in particular, like, so biographies. I think just tremendous to see, like, how Neil, like, if you're faced with a problem or issue, what's your lens for solving that and how it looks and what you do and the innovation and just how you think. I think there's some great, we were over, you and I were, by chance, were over that one. I mean, I came home and got that. I never read that Snowball book. Snowball, is that for Snowball?
Yeah,
yeah.
We were at the annual conference for Berkshire
Hathaway. And just how does that guy, how does he look, or when he's faced with something, what's it look like on the inside, I guess is what I'm trying to say, and how does he, if he's presented with something, what decision making does he go through to get to the end result? It fascinates with me. I mean, how could he become like how did he do it? He was raised very, he wasn't anything what he turned out to be, and I'm just wondering how those decision making allowed him to, and I was always fascinated by that. So I like to read biographies as well.
If you were cast away on an island for a year, you could only get 3 pieces of data about your business each and every month. What 3 things must you know to know how your business is running?
Well, I think one's got to be customer force and base. So what we're doing, we've got a software model that allows us to know. It's called our index, which allows us to tell us where we're at in terms of relationship to what our customer satisfaction level is. So I like that piece. I know that if we below 80 or 90, we're going to lose some clients because of dissatisfaction. I like to know that number, where we're at. So I always like to know cash on hand, like where we're at, like dry powder, like do I need to know where we're at? And I mean, because that's impactful. If you can't invest in capital and infrastructure and real estate and you're operating, it can be. So I always like cash on hand or cash cycle or age receivables or any of those in that world. It lets me know that we're okay in terms of cash. Because I think if we're running out of cash, we're either growing too quick and I need to figure out a funding mechanism or something like that. My other one would be, I guess my last one would be how do we articulate, or how we like we do a strategy piece, and I always want to know like where we're going, like where we're at with our number one. And because to me, if we're looking for today, we're not well. So I'd want to see where we're at with our top 5, and see what our vision is and see how we're getting towards it. Like we have a 3-year vision, and what does that look like? Where are we at today on that? So, because I think if we're living every day in that business, we're in trouble. It's already happened. We got to look forward, not 80% out of that's why the front window's so big. We're looking forward down the road, and the rear view mirror is only 80% forward, 20% behind. So I want them to keep thinking strategically, because it's easy, especially I have operating companies. It's easy to get wound. Somebody's calling, and right, and pretty soon you've got a year and you haven't moved. And I did that my first 10 years. So that's important for me. Like, okay, I know we're busy over here operationally, but where are we going? What are we doing?
Todd, there's lots of questions. What's one question I did not ask?
What's question you? I think it's important, like for what our structure is at home and family. Like, what does that look like, and how's that feeling, and what purpose does that bring you, and joy and that kind of stuff. So I think family and relationships, that's really, at the end of that's how I've grown my business, like networking. I don't offer anything revolutionary. I'm not an AI or some revolution. I did it by networking. I think friends and family would probably be saying, what does that look like for you? And how does that help you in your business and how you carry yourself at the office?
Let's chat about it a little bit. You may have more friends than anybody I've ever met in my life. I mean, we were out the other day, and I think you said hi to half the people who were there in the restaurant. You're just known because you've been, You planted your flag.
Yeah.
And you've been here a long time.
Yep.
And you've been in the same business a long time and done other things. But and then you lean into it in a big way, though.
Yeah.
Mentorship is, whether you knew it or not early, it's in your blood clearly that you've helped foster a community of like-minded people in the city too.
100%.
Leaned in heavy.
I don't know. And honestly, I don't know how else you do it. I don't. There are some people that are successful at that, but it's the only way. Like if I know if I need a bottle of water, I know who I know who I'm calling. I know how it looks. I know, and vice versa. When they need something, they know that I'm their call.
Yeah.
Right. And I don't know. That's just for me. That's just flows through you, and I think it's very important for me. Yeah. I'm not saying it is. I think people can function without that. I couldn't do it, but I don't know. I wouldn't like to do it. I mean, that's my whole world. If I know that, and I'm loyal. I mean, I'm going to do. I know you, and I know you're in this lane. I'm choosing you. I mean, that's how it works. Yeah. And so I think but I think that piece, as you are forming any business or real estate portfolio, you've got to have. I mean, to me, you have to have those strong relationships, right? I think you have
There's
to.
A lot there.
There's a lot there. Mm-hmm. There's a lot there, and so I think in some lanes that because this AI and the internet is changing that to make it more binary, where we don't have the face to face. But that's not my generation, and so that might change. But I think it is changing, by the way. Not might change, it is changing. But the way I have been successful is through in-person networking and relationship and deal making. And that's how I was successful. There's no doubt about it. And I didn't have a magic formula. And I'm not the smartest person. That is my formula. So if I were going to ask you, if you're going to ask me a question, that I would talk about that with people, because I think it's important, because it gives them that foundational stuff to be the stepping stone to be successful in real estate or whatever business they're in.
Well, with that, for people who want to find you, follow you, connect with you, where can they go? What should they do?
Yeah. My email is Todd, TODD, at cleaningconnection.net, Todd M at cleaningconnection.net. I'm happy to respond or chat.
I appreciate your time.
Take care. Great. Thanks, Neil.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in